Thanks. Small disclaimer, as I'm a big Bitcoin believer. I own Bitcoins. Most of my money is in Bitcoin, so this is just research. I believe that blockchain technology itself can solve a lot of problems in financial industry. That's why I'm working on this project. So today we'll talk about how we can apply blockchains to financial ecosystem. Specifically because I see many projects that try to apply the same concept as in Bitcoin for banking industry, and with all drawbacks that Bitcoin has. But for Bitcoin it's fine because it operates under certain assumptions, but for financial ecosystem it's not fine. So I will talk about what I mean exactly. A little bit about myself. My background is information security, cryptography. I have a PhD degree in it. I used to work at Stellar. Now I'm with Timbuso. Timbuso builds like identity layer on top of any transaction engine. So you are able to combine anonymity and KYC on the public blockchain. I conduct free educational courses about cryptocurrencies all around the world. I run like small research lab back in Ukraine, which does like any kind of research, open source, commercial, own projects, conferences. And you're all invited to Blockchain Incredible Party version 2, which will take place at January 5th in Ukraine. Maybe, yeah. No, it's not so cold. You can check the website beep001.com for details of the previous conference, which was awesome. Yes, and I'm a world citizen, so I travel 9 months out of the year. I'm everywhere, doing research in planes and trains. So this presentation initially was created in the plane. So let's start. I summarized why financial industry and banking industry is interested in blockchain technology. Yeah, obviously, like blockchain is a nice word right now. If you add the blockchain word to a startup, your valuation will be much bigger. And that's why everybody is excited and doing everything on blockchain, even when it's not needed. And since banks need to update their legacy systems anyway, and here is such a nice industry, they kind of interested. Okay, let's achieve two goals simultaneously. So they are interested because they want to achieve fast settlement. You know that for transactions it takes like 30 days to settle, which is kind of strange for the 25th century. Then undeniability. This is kind of feature of digital signature. You always can prove in a milliseconds that this document was signed by a certain party. Then you have possibility of easy audit, because if everything is online and signed, it's up to computer to check everything. If it's everything in paper, it's obviously you need to hire people, pay them salary, whatever. So it's long and expensive. Obviously, everybody wants to have like standard set of protocols, like internet, like HTTP or IMAP for email. So they don't need to pay different companies to provide custom solutions, which are usually closed sourced and proprietary. Yeah, and the last thing is obviously like open source is a big trend. Everybody wants to be open source and using only open source systems, like to some extent, because you have variety of options. If you need to have some support or questions, etc. This is kind of a little bit controversial, but I believe in this. So I think that Bitcoin or any kind of project that exists right now, that is very known, cannot address problems that financial industry has for different reasons. First of all is scalability. We all know that Bitcoin blockchain is not that scalable as we need, and you can't make it so scalable. You can't achieve millions of transactions. Also because you have a single ledger. So everything has to be in this ledger. So it will grow, the size will grow exponentially with amount of participants. And when you need to achieve consensus, you have to basically send information to all the parties around the world and wait for their confirmations. That's true for Ripple, for example. Then comes trust problem. That's an example I hear all the time, that why should I trust some anonymous validators or semi-anonymous to validate transactions inside my bank or inside my company, even if I do it like privately between my own accounts? That's a good question. Why really should I trust somebody? In case of Bitcoin, you have to, because you trust nobody and you trust everybody at the same time. But for financial industry, where every party is identified, it's kind of strange. Next thing is, obviously, there is no KYC AML mechanisms in all these systems. You cannot touch them, but it will be kind of strange. Bitcoin is designed to be anonymous, and now somebody wants to make it non-anonymous. It's kind of changing philosophy. Then the next thing is that stems from having single ledger is low privacy of trading positions. That also concerns banks, because they don't want anybody see what they have, which assets, and how they trade. And obviously, built-in coin, like XRP, for example, or Bitcoin, is not super desirable. So to make transaction, you need to have this coin, and this coin is controlled by some anonymous parties, then may be associated with some bad transactions. So that's the concern for regulators, the biggest concern. So I had certain thoughts about why this problem exists, and then I figured out quite simple solution how you can change that, how you can apply blockchain technology to financial industry. So I will repeat again, you can't say blockchain is everything and Bitcoin is everything. It's just because it is very good for certain use case, for under certain assumptions. If you change assumptions, it's a different situation, and it will be, you have to build different system. It's like saying C++ should be used for everything, to develop everything. Obviously it's not true, or assembler or whatever. So this is just a technology, and we need to apply it differently. So few principles that very basic and describe how it works is that every entity has its own ledger. Like my personal financial ledger, I have it on my computer, and it contains only my assets, my transactions. There is no global ledger at all. There is no global consensus. When I trade with somebody, I achieve consensus only with that party. I don't ask anybody else to approve this transaction. There are no validators like miners, so like validators in Ripple.
Excuse me.
Yeah.
When you say there's no global consensus, what the hell does that mean?
It means that when you trade, when you give me some Bitcoin, for example, when you give me cash, you don't need to ask approval of somebody. So this is like consensus between you and me, like cash. And there is no coin inside. So this is just a protocol that describes how financial institutions, and not just anybody who is involved in any kind of transaction that does something with numbers, with something countable, should work. Regarding validators, so if you think about Ripple has gateways and validators. So even if there is a transaction inside between users that use the same gateway, it should be validated by some validators. I think that it's, for financial industry, it's not the case, and financial institutions should be validators themselves. They should do validation, and if transaction is inside their area, they should validate it, nobody else. So how it looks like. So this is like Citibank, for example, and it has customers, and each customer has its own ledger, like just financial records. And these ledgers are shared with Citibank. This is basically true when you come to the bank and ask to open an account, and you have access to this ledger and bank has access to this ledger. It's the same story. And then every other bank has the same. And obviously banks have their own ledgers also. Could be many, not obligatory one. And users can have many ledgers as well, like for private and business use. And then ledgers of banks will be shared with regulators as well. So regulators can keep an eye on what is going on right now. Like they can monitor it. But basically, this is the same that happens right now. I see the ledger structure pretty straightforward. You have an account. It is associated with some public key, some federated username is attached, like email or phone, something else, and then there are balances with different assets. Like Alice owns some deposit in Citibank, in DBS Bank, in Deutsche Bank, or whatever bank. And Alice can hold some IOU, some bonds from some other person, which are like private bonds. They may not be guaranteed by anybody, so just it's a record, that's it. And some system parameters like sequence number of the ledger, like cryptography that is used to sign this ledger. So obviously there's another thing that if you use global system, we usually have only one cryptography, like one set of system parameters. And it's a concern that why Satoshi selected this elliptic curve or that elliptic curve. Maybe it's not so secure, and different countries have different standards regarding their cryptography. So ideally, we should be able to use different cryptographic schemes in the same system, the same as HTTPS or SSL works, the same way. So, and then in this model, when Alice needs to pay Bob, and they are customers of different banks, very simple steps coming. Alice just signs transaction where she initiates this payment, and then Citi verifies that Alice really has these dollars. Citi co-signs, maybe like after two-factor authentication, and then this transaction is sent to like DBS Bank, which is bank of Bob. DBS verifies something and then co-signs it as well, and then Bob is able to fetch this information from its own bank. So at this point, three parties sign the transaction, and since all of them are identified, it means that they can update their ledgers, not obligatory simultaneously. They can update it, and they can provide a proof later that the transaction actually took place. So it's the same like you have a document, like paper document, and three persons need to sign. It's kind of like multi-signature. And yeah, this is just a protocol how it's done. So there is one interesting thing like identity resolving. The best solution probably is to use federation protocol that was introduced by Ripple. So each financial institution is in charge of doing KYC and registration of their users, and then providing like database, could be like blockchain as well, where usernames are attached to public keys. So Citibank has to ask DBS Bank what is the public key of Bob. That's it. And DBS Bank will respond to Citibank, and transaction will take place. And each response obviously is signed. So later on, if something happens and Alice actually sent money to Eve, then Citi has a proof that DBS actually signed this response. So they are now legally responsible for this fault. it's their fault. So the next thing is that transactions are distributed not in some network. They're distributed only to parties who are connected like by some trust relationships. And this trust relationship is something that beyond technology. It's like I trust this person and we have a secure channel of communication. We have secure channel of communication because we know public keys of each other. So in terms of Bitcoin, we know addresses of each other. We exchange these addresses in person. And now we know that definitely transactions are sent to the right place. So you have this network of banks, like doesn't mean to be banks, like any gateway, yeah. And they can trust, they can trust each other. It doesn't mean if Citi trusts DBS Bank, it doesn't mean that Citi will trust Deutsche Bank. So if transaction comes through from Deutsche Bank to Citi, then only signature of DBS is required, so Citi can accept it. And if nobody trusts there's some gateways that issues shitcoin, then nobody will accept it. And then you can have like a gateways that issue like complementary currency or bonus points, like Macy's or some T-Mobile issued their own coin for customer satisfaction. And then they are able to establish trust relationship with some bank, so their users will be able to exchange coins to dollars and vice versa.
Just a quick clarification on this slide. Are you saying that if you're a customer at Citi, that you're expecting them to become customers also? You have like usernames here?
No, just usernames. It's like customers of this system.
Okay.
Yeah,
all right.
they're even the same. You expect to be able to transact with customers of bank that is inside this trusted network. So you will not worry when you are paid with IOU of that bank, because your bank will guarantee that everything is fine. So it's like the same like right now. Banks have trusted relationship. If they don't, they use like correspondent bank or central bank to provide the trust. So you can build with the same model. Then we are coming to like how offers are distributed. Basically, we're in the same way. When Bob creates an offer to exchange something to something, it gets distributed to all gateways that are in the trusted network. And then, so Bob signs, then DBS, his bank signs, and then other banks sign these offers so their users are able to see them. And when somebody, for example, like two users from different banks want to take this offer, want to exchange this asset to that asset. So they create a transaction that basically says, I take this offer. This transaction is co-signed by their banks and is sent to DBS. And now it's up to DBS to decide which transaction should be confirmed. So it's like an auction, but we have a person decides you won, or I like you more. And when DBS decided which offer to take, then it basically sends again a transaction, like Alice, congratulations, that's yours, and sorry to others, offer is taken. This is not a decentralized exchange yet, but we will come to this later. Now we're coming to like frequently asked questions. I specifically added them because I expect a lot. So first, who should validate transactions of a user? So the answer is that gateway that basically holds assets of this user. Like if you have a deposit in the bank, that bank holds like dollars for you or stocks or something like this. So if there is a transaction inside the same bank, that only this bank will validate it. If there is a transaction between two banks will validate it. Nobody else is involved. There's a question like who can become a validator? You've seen this shitcoin, so everybody can become a validator. So everybody can become a gateway for something. to issue some currency, some IOU or whatever. But it's up to others to trust this gateway. So if I want to have some shitcoin, I will explicitly say I trust shitcoin gateway. But it doesn't mean that others will accept payments in this coin. So it's kind of affects only those who trust it. Why validators are needed at all? So why not users can issue their own coin and that's it? Basically, gateways or validators, which is the same, they play an important role of doing KYC, doing two-factor authentication, validating that user actually has these assets on the account. So signature of gateway is kind of legally binding. If gateway is a bank, then obviously it is legally binding. If gateway is some random institution that is not regulated, then it's up to the user to whether trust this or not. And obviously the trust relationships will be managed by gateways. So if to specifically apply to financial industry, we don't have hundreds of thousands of banks. So it will be much easier. It's kind of like a web of trust. It's much easier to build web of trust between institutions that already know each other and that they have some physical presence and registration somewhere in some country. So it's just much easier to implement this concept. Why should bank trust signature of the other bank? The answer is that it should not. It's not obligatory. Trust is establishment of trust is something beyond technical possibilities. It's between people. But as soon as trust is established, you can exchange public keys, and then this trust will be electronic. You can say, okay, this is signature of my partnered bank, so I trust all transactions that come from it. Obviously, you can apply multi-signature and so on and so forth. Where is the blockchain or ledger? So actually, you don't need blocks here. You can validate transaction per transaction, one by one. You can make chain of these transactions. Obviously, it's a good thing. You obviously will make chain of ledgers to keep the history, but you don't need blocks. But you can validate them by blocks, by batches. You can sign if your customers make 1 million transactions per second, you can sign them in batches. What does ledger contain? Just balances and receipts, transactions that says, okay, this asset was obtained from that person, here is their signature. The next comes why should I trust that other user updated ledger after common transaction? I can't be sure, but what I have in my ledger is an ultimate proof that user signed the transaction and his or her bank also signed this transaction. So if something bad happens, I can go to court and say, oh, here's the digital signature of my partner. But something bad happened, so here is the proof that I'm right. You can't prevent double spending, just straightforward. The system is not about preventing double spending. Bitcoin is preventing double spending. Here you know who is double spending, which person, which entity is double spending. And the next thing is that if ledgers are shared with regulators, then I'm able to track instantly who is doing what and see that somebody issued more assets that was allowed. And users, when they trust unregulated gateways, that they trust them. That's it. The next is about identification of an asset of ledger and username. So again, everywhere you have digital signature, you have a public key for each asset that says that okay, this asset is indeed Apple's share, and no other asset which name is Apple's share. It is. So everything is cryptographically secured. when I basically, for the first time when I wrote the white paper, I realized that I actually copied the system that works right now. Every business has its own ledger, every bank has its own ledger. There is no global ledger right now in financial industry. There is no global consensus also. Yeah, I mean in financial industry, except sure. And so this is just a protocol that describes how we can improve, I believe, existing financial industry. To make it more efficient, to make it run on top of open source protocol that is the same for everybody, that just an accounting protocol that nobody owns. Here's a quick note about decentralized trading. As I said, it's a challenge. So solution, the interesting solution is that banks that trust each other are able to create like a virtual instance, like Ripple instance, and do decentralized trading. They can have like a shared ledger specifically for order book, and they can trade very efficiently. As soon as you don't need formal consensus, even PBFT is not needed. You are limited only by speed of like internet connection and speed of cryptography signing. So it's kind of like Ripple by itself will be like just one cell that can be created instantly, and then gateways can disintegrate again. So you can create virtual decentralized marketplaces instantly wherever you want. Nobody controls connections, so there won't be a company that says, okay, we are doing this, we are controlling this network. It's just a protocol that says, it's like a language that says how to talk to each other, how to talk about transactions and balances. So it's a piece of software that, like a BitTorrent, you install it, and then each BitTorrent instance knows how to talk to other BitTorrent instance. You don't need, like, as I said, you don't need network effect. You don't need to be everybody at the same time at the same place. You can see the single instance of the system, just an internet bank. You can set up it very fast. Like you can set up your own blockchain, your own coin in a minute, and Ripple instance like in a month, for example. And then it will be your own accounting system where your users are able to register, they can transact with the coin you issued. And as soon as you have trusted relationship between these 2 or 3 or more systems that was shown on the previous picture, users are instantly able to send like currencies to each other, and they will be exchanged in between. And the last thing, so why I'm doing this and what's the goal? So it's obviously you can't make money on writing the protocol. Like HTTPS and SMTP are good examples, so SSL, it's just a protocol, but somebody has to do it. I know at least 5 companies that want to create a protocol, but more or less they want to make it proprietary somehow. So I believe that we need to build an open source protocol. It doesn't mean it should be exactly like this, but the concepts, I believe they will be like similar. So that's my kind of vision. That's it. I'm ready to take some questions. Thank you for listening. Yes.
Did you present it to some of the banks? Because to my understanding, the problem that Bitcoin solves for banks is that they have too many branches, and transactions are getting lost between the branches within one bank. And in your proposal, you assume that one bank will have one central server. It's not the case. They have thousands of the servers that are getting like out of sync. And this is the same problem that Bitcoin nodes solve within themselves. So how?
You mean in terms of currency system or in terms of connectivity? What's the?
I think he means the architecture between banks is different and not homogeneous.
So even if you may have a bank with multiple branches, their entire IT infrastructure or banking infrastructure could be different between the two. Is that what you're trying to say, or am I making it wrong?
I'm trying to say that you may be solving a problem that don't exist because you didn't explain how transaction will be processed or distributed within the branches of one bank.
Okay, we'll think about this, but I don't believe that Bitcoin will be used in banks at all. Like as we know them right now, it will be completely different institutions.
Well, Ripple is currently being used within banks.
Ripple is not Bitcoin. It's not a currency even.
Okay, but do you have like at least one bank who said that they are interested?
Sure. Yeah, that's where I put this. Why existing solutions are not fit. That after I talked to many institutions that needed solution. Yes.
I mean, my question is, do you think that the currency needs to stabilize before this becomes a reality? Do you think this is a way of stabilizing, like for Bitcoin or like other? Because I mean, it seems like the big issue is the fluctuation in the value. That's one of the big things that scares people away from the currency.
You mean that why banks will not adopt Bitcoin, or?
Well, not just banks. I mean, like if you're somebody that has sufficient assets to be this sort of an exchange, your deterrent might be that you could lose a lot or you could gain a lot. It's a high volatility situation.
Yeah.
So I mean, does something like this offer? Are you viewing this as a way to stabilize the currency or just provide some normalcy?
No, it's completely different problem and completely different solution. Yeah, it's not related to Bitcoin. So yeah, obviously, like Bitcoin has a prominent future because it can work under assumptions that completely different from existing assumptions. So before it was not possible to do things like you can do with Bitcoin right now. That's why it's valuable. But if you want to solve problems of existing problems in some existing environment, then obviously you need solution that fits them. Yeah.
Okay, I can rephrase my question. Do you assume that one bank will have one central server with transactions?
To be honest, I haven't thought about this yet. I will think about this. How you can make it more, it's a good question. Thanks. So we'll discuss it later. Yes.
So I think with this, the public key is going to be very closely tied to identity. And what type of entity do you see managing that public key and handling things if, let's say, there is fraud or disputes with transactions?
Like each identity provider, who is like bank in this case or gateway, will be responsible for registration, revocation, storage of this list. Obviously, this data can be somehow shared between organizations that do it anyway right now. But at least there will be a clear record with a signature that the state of this database was like this at that point of time. So later on, if something happens, you can say, like I as a user, for example, I transacted with Bob. And later on in the year, it happened that I transacted with not with Bob, but with someone criminal. But I have an answer, signed answer from bank of Bob that was like Bob. And Bob was a good person. So I have this signature and I go to court and say, here is it. So I'm clean. Yeah.
So I can't remember the name of the system is in the US, but currently, like, if you're both partner, can text or something like transfer money to somebody in another bank, like Chase, it's like short pay or money pay. I can't remember the name that someone's using. So I can see how this could be a technical solution that could perhaps be better than what they have and help other banks do that cross-bank transfers if you want to do it that way. But where it appears that banks are really excited about settlement, trying to reduce the time it takes to settle with a trade in the back end. Currently it takes maybe over 3 days to settle all the trades before you actually have stock in your account.
Yeah.
So in Europe it's down to T+2, and in the US they want to reduce that. So this system doesn't seem to really help with it. There's like double spending and conciliations.
The kind
so
of.
do you see it moving that way, or do you think the blockchain has to be used for this purpose?
Like blockchain is just a database, and the settlement takes a lot of time because of regulation. And regulation also like this because when it was created, there were no mechanisms to do it faster. So there was some paperwork was involved and maybe some checks that require some time, like a chain of institutions that have to approve certain transaction was involved, and they had like SLA, which says like half a day. So systems were built under other assumptions. That was enough for that time, but right now we need instant confirmations, and you can do it with digital signature. So it's not a breakthrough, it's just improvement. Yeah.
So assuming that you were to use the blockchain protocol, which is basically what you're talking about, doing an adoption of a new protocol for communication between gateways, you said it would only take one. So let's assume Fedor Bank is using Ripple Labs, right? You're saying it would only take one for adoption. So how do you get other banks to adopt a similar protocol? Because ultimately what it would take initially is peer-to-peer communication or peer-to-peer transactions through a gateway like Fedor to grow it and see that adoption would be viable for another gateway, say Wells Fargo, or another brick and mortar form of bank. How do you see adoption happening between other banks? Why would they run would they run it parallel to their legacy system?
That's a good question. I don't know, like with banks it obviously will take like years. I don't expect like anything faster than like 5 to 7 years for banks. But what you can do is you can onboard financial institutions that don't require regulation, that can issue their own currencies or whatever assets, and they can integrate it much faster, especially those who need to update anyway. Or those who want to have some currency, like some bonus system, but they don't have it right now, so they either have to buy this IT system or they can like take some open source. So, and then as soon as you have enough institutions, they all use the same protocol. Obviously, it will be much simpler decision why should banks select similar protocol or not.
Is there a solution that will allow an adoption that is not a mountain for them to overcome, to assimilate the legacy system onto, obviously there isn't one now or it would be probably working, but can it be built?
I haven't thought about this yet. So I'm sure you...
Okay, I have another question then. Okay, so when you talk about liability, right, of the escrow between two gateways, right, you talked about it can't stop double spending, right, that you can identify it relatively quickly. So it sounds like the liability being held by the person who could be double spending would not work. You would need to have some sort of a shared escrow or shared liability between gateways, so that if one person is committing fraud or one entity is committing fraud, there's a way to eliminate it. How do you see the escrow?
Yeah, obviously, bank, if Alice wants to double spend and corresponding bank can't check Alice's ledger, so bank that manages Alice's account is responsible for that.
So, but if that bank is double spending, then so they could run around and double spend for the tune of a couple million, tens of millions of dollars.
Right, but
there would be no way to stop them.
That's up to the second bank to see. Oh, it's kind of something strange happening.
So then the trust is important.
Yeah, trust is sure. The trust is the key.
And you're saying this trust is established primarily how?
By non-technical mechanisms.
By
non-technical tools. It's like risk management systems.
Right.
Yeah.
So I know you've been developing this for banks primarily. So I have a few questions. One, can this be extended to something outside of banks?
Yeah, sure.
Two, if so, how far can you extend it? To what sorts of applications, and could it be used for just regular businesses that are not banks or bank-like at all? And then what would it look like for those types of businesses to validate and use this kind of technology?
So as I said, you can use it for anything that when you need accounting and when you issue some balance and when you have users that you transact with these balances. So anything you can imagine. So for example, why I think it will take off, like the lab I run has at least 5 customers that build complementary currency systems or bonus systems or gateways, and they all want closed system. They don't want, so they technically say, give me blockchain where only me is the owner. So nobody else will be involved in validation. So I control emission and all asset life cycle. So this is kind of closed system, but later on they say, oh, we need something that if our users wants to like exchange these bonus points with our partners who have like some kind of the same system, we want to do that. So obviously you can't merge ledgers. Like, it's just very complicated. So this thing can help because if you use it from the beginning, you already have protocols to like for systems to talk to each other. So it's not for like banks. It's good to talk about banks because it's like publicity or whatever, but as I said, it will take years to do that. Yeah.
Yeah. So this system, using just sort of public keys, how do you add transaction constraints? For example, if a bank or a merchant has issued some kind of bonus points and they only want certain banks in certain countries to go and move them around, where does that logic come from? Now, if you were to sort of move that model more to a blockchain-based model where there's some kind of logic involved, some kind of scripting, you could do that. You could have permissions. You could constrain the transactions of certain quantities, sizes, etc. So have you thought about sort of adding that in eventually?
Let's talk about this after. I'm not sure that I fully understand the questions. I don't want you to repeat it.
Now, how do you stop, for example, the Macy's credits from flowing to a country where they're not supposed to go to? Now, you could say that the banks could come up with some arrangement themselves to say you can't transfer them on, but wouldn't it be simpler if the issuer just encoded the constraints straight into the system?
If you can see here, you have right, parameters. The second thing that parameters of asset contain like who is eligible to hold this asset and expiry date and many other things. You can add there which cryptography is used, like how many times it can be transferred, maybe some demurrage fee or something like that. So I expect to have this. Yes.
Have you thought about the threat model at all in terms of, I mean, now banks spend a huge amount of money on security, but the types of attacks they're seeing are going to be pretty different with a system like this, I think.
Yeah, with this kind of systems, your main threat is key management. So user key management and gateway key management. But this problem is addressed by other companies that create like hardware wallets, mobile wallets, and so this system doesn't touch this problem.
Well, a follow-up then, so do you expect users to actually have some control over keys, or is this something where the bank, is really...
I think users will hold their keys, like on their devices. Like there are a few startups that build solutions so you can have your key in a protected area inside your phone and no virus can take it. So you really need a physical confirmation from the user to initiate the transaction. The user will always see the correct balance and address of the recipient. So, or hardware solutions with the screen, with like password or some other thing will be used. I believe in this. Yes.
How would you, or would you compare this at all to like Chris Odom's Open Transactions financial crypto library?
I talked to Chris. Like from what I understood, the initial idea was kind of similar, but they're still using the central blockchain. So they built many blockchains, but they communicate with each other through single blockchain. Could be Bitcoin or Ripple or like something like this. So and then now, as I remember, they are focused on securing Bitcoins between different exchanges. So you can deposit Bitcoins in some pool, and you need to have a multi-signature from, for example, from Kraken, from BTC, from like who else, Bitfinex, to release these Bitcoins. But you can trade them fast. So this is what they're focusing.
Yeah, I mean, like that's a way that you could use the system, but I mean, what it starts as really is just a client-server model where you have a triple signed receipt. So when you make a transaction, the sender signs the receipt, the recipient signs the receipt, and then the server signs the receipt. So it's,
exactly.
It's very similar to what you're doing here. Now, one of the challenges that they were dealing with is like, you know, how do you, for lack of a better term, ripple payments between institutions that don't trust each other. So like if I have a Bank of America dollar and I'm trying to pay you and you have a Wells Fargo account, how do I get that payment to you?
Like this
in your system.
This is managed by, like an existing system is managed by trusted relationship between banks. So they have netting, or they use like central bank to do netting, or they use corresponding bank to have netting. So exact the same thing. So trust, netting, and some intermediary, or market makers.
Okay. And these transactions, will they happen more or less instantly, or do they need to wait to hear
As soon
back?
as it's signed by both parties, it's done. So it's up to them which procedures they have before to sign transaction. So I don't know. This kind of doesn't matter now.
Okay, thanks.
Do you worry that it might be like too auditable? I mean, banks will find it like harder to fudge the books, and it'll be easier for regulators to surveil it. And those both seem like bad thing from the bank's point of view, because you can't fudge your books easily, and from the customer's point of view, because now if you don't have a money laundering agreement with your bank, then you have a harder time.
Yeah, I think that system should be auditable as much as possible. So, and I want to provide users mechanisms to audit what their banks are doing. So, as I said, user will have a signed receipt from the bank for each action, for like name resolution, for transactions, for balance. So, user has to store.
So, isn't the bank exposing themselves to liability by signing things? I mean, it's kind of less liability. You just give them an unsigned thing. You can take it to court later. Maybe you win.
This is the question for after party.
Okay.
All right. Do we have time for one more question?
Yes.
If my keys are compromised, is there a way for me to broadcast that widely?
I think it's up to your gateway to decide. You can call the same story. You call to your gateway and say this transaction was initiated not by me. Like obviously, you can't. I don't know. You may implement a mechanism to revert transactions if needed. It's flexible, but in general case, you just block this key. That's it.
All right.
Thank you.
Pavel.